So this is like one of my favorite times of year. You say, what do you mean favorite times of year? It's like we're in the dead of winter. It's 12 degrees outside. Well, it's NFL weekend, championship weekend. It is all the radio talk, all the TV talk, all the apps, everything about talking about the teams, talking about who's better, who's this, all the talk about it. So excitement about for the NFL, NFC, and AFC championship games this weekend. But one thing that always comes to the top, and the question is, who's the best quarterback that's going to get him to the finish line, to get him to the Super Bowl? Hi, everyone. My name's kdee, President of Osage Advisors. Welcome back to our podcast, Ins and Outs of Selling a Business. Right? It comes down to the quarterback, right? Who's the best quarterback? Is it Josh Allen, right? Is it Daniels out of Washington now? Mahomes out of KC? So there's all these things about the quarterback. So to kind of equate that to business owners when they're in their planning process or eventually exit planning process, we're really happy to have with us today Richard Dvorak of Discovery Point Wealth Advisors. Richard is been in business for 24 years. He works with family close-sale businesses throughout the whole planning process from the start until they exit their companies. He was recently named by Forbes magazine as a 2024 Best in State, in this case, state of Texas, and recognized by Barron's as one of the top 1,200 wealth managers in the country. Richard also holds his CEPA, which is a certified exit planning advisor. And Richard, we're so happy to have you with us today. Welcome.
Thank you, Keith. Thanks for having me.
So the team, right? The team on the NFL, the two games this weekend, and then execution of their plan to win the game. But it all kind of falls back to, who's kind of quarterbacking, who's going to raise to the occasion and make this, get them to the Super Bowl. So I'd love to get a sense of a little bit of background on your team, how you guys work with business owners, and maybe delve in a little about your approach and how you help them manage their life goals from beginning to when they decide to transition out of their business.
Sure. I'm happy to share. And thanks again for the opportunity. I like the analogy of the quarterback. And when I think about the practice, I've been in business for 24 years. We started off building the business around traditional financial planning and wealth management. So the focus wasn't necessarily on business owners, it was just on people that had money that we could manage and help them map out their goals. But I always enjoyed working with entrepreneurs and owners. I've been one since I was 13. Every entrepreneur has that story. You mowed grass or you had a paper route. And I was one of those kids who was mowing grass at 13. And I've always enjoyed the conversations with the entrepreneur clients. But the focus really wasn't on that until about 8 years ago. And it came from a big failure. I had a client who had a decent amount of money with us. The couple had a business. They were doing $100 million in revenue. And I told my wife, I said, they're not really excited about what we do from a traditional money management standpoint. I feel like we're renting this money. I don't really feel like I can show value to them in a way that's going to, lead to a long-term relationship. And that came to fruition. They actually left. Goldman Sachs took them away. And it started me on this quest to say, how can we show value to business owners? And what I realized with the wealth management industry is we go to these business owners oftentimes with products, and that's okay. They need products, they need services. We come to them with 401ks. We come to them with, would you like to invest your money? Maybe you need insurance, buy-sell agreements, funding those. And it's very commoditized. And that's not really where I found the value with the business owners. And what I realized, Keith, is for the business owners, the most important thing for them is typically their business. It's their baby.
That's right.
And helping them identify the value of the business and helping them figure out how does the business align with them, helping them achieve their financial goals and their personal goals. That's what's most important. So then our process became about, okay, how do we do that and what does that look like? Now, I like to fashion ourselves as the quarterback of the financial team, but oftentimes it's people like you, Keith, when they're in the exit process. But somebody needs to do that. Like you said, I think it was a great analogy. You can have a great, you can have great players, but if you don't have a great quarterback, you're not going to make it to the big game.
Yeah. So, yeah, we talk our clients. They come to us. A lot of them come to us, when they're ready to sell, right? A rare occasion with someone will be coming to us, 10 years before they're ready to sell. Usually they're talking to us maybe 6 months out, maybe 3 months out, sometimes a year. We may have initial we just signed up a client that we started talking to 18 months ago, but he wasn't ready, right? He was, like you said, it's the most important decision you're going to make after you possibly, getting married or having kids. And when we sit with them, we kind of talk about the business and about value and about these things, but we also talk about, have you talked to your other advisors, about what's important to you in this whole process, right? And that is like, it's kind of like, what do I need? Right? It's like, after I'm out of my business, what do I need to do the things I want to do? And, sometimes they don't have an advisor, or they have someone who's managing a small piece of money, because the business is worth $30 million or $40 million or $50 million. And they have maybe $1 million liquid assets. They put everything, all their equities in the company. And it's not just for them, right? It's their families are in the company usually. They want to fund their grant. They want to fund education for their grandkids, charitable giving, listen, on and on and on. So I guess, when you sit down and you with that owner and his family or her family, right? It's important to have everybody in the room. How do you kind of approach that? Because it's a very emotional time, and there's a lot of unknowns that this is a new territory for this owner and his family.
Sure. Yeah. Typically the clients that we get, the business owners, they're not necessarily looking to sell right away, but it's pretty imminent. It may be in the next 3 years. And as you know, Keith, they usually need time to plan and prepare for a successful transition or exit. And what I see with the wealth management industry, and I've been guilty of this, so I'm not trying to throw us all under the bus, but if a client has a lot of liquidity or assets to manage, they're a very attractive client. If I'll show you somebody with $10 million, I can find you thousands of advisors that will work with them. If they have $1 million and most of their wealth is in the business, many advisors aren't really interested in that client until they're liquid, because then there's assets to manage. And I'm not saying that's a bad thing. People need good investment management, but it's often, call me when the liquidity is there. So when we're engaging clients, it's more about how do we help you plan and prepare well before there's a liquidity event. I'll give you an example. I was thinking of a recent client who came to me, has a decent amount of money, a couple $1 million over at another firm. It's not a large account, but it's decent. And the advisor never asked them about the business. Tell me about your business. How does this play into achieving your goals? The conversations would always be, hey, do you have any more money to invest? And here's how the money that you have invested with us is doing. And so when I started engaging with a client, I started asking, well, how does the business play into you achieving your goals? And, what does the valuation need to be? What is your target equity valuation? How are you going to exit? And so really get into and think about, what does that look like if they were ever going to monetize the business? And in doing that, we need to bring people to the table. We need to bring somebody to do the valuation. We need to have the CPA calculate the net proceeds, right? After they sell, what are they going to net after taxes? We need to bring in M&A, right? Company like yours to start saying, okay, here's your options. Here's the process. Let's look at the business and how sellers are going to look at it and how we'll take it to market. So, when you go back to that quarterback analogy, it's really like, who's going to quarterback all of that? Who's going to bring people to the table? So when I initiate with a client, that's how we start bringing those other professionals together so that we can collaborate and work, holistically and proactively for that client.
Yeah, it's it's almost like having a dashboard, right? I mean, it's like, I was involved with a client years ago, and this is common now, is that They realized that the people weren't talking to each other, right? You had your primary care physician, you had your oncologist, you had your nurse practitioner over here, you had your this doctor and that doctor, cardiologist, everybody, right? You name it, but they weren't talking to each other. This is years ago, right? So you may have the best plan, but if you're not taking your medicine, you're back in the hospital. So someone realized all this and said, look, there needs to be a coordination of effort so that everybody is getting all the information on a consistent basis, right? So people they know. So it's like if one hand's not watching the other hand, right, or watching the other hand, whatever the analogy is, that even though you're in best practices, you're feeling good about here, but you're not focused on here or bringing that team player in here, it could cause one reduction in value, possibly not getting a deal done, or a failed transaction. So, from your perspective, I mean, it sounds like you're looking to get that communication stream going with these professionals, right? For their investment. It's an investment on the client's part. And I just want to maybe expand that a little bit from how you guys work that way.
Yeah. Keith, this is usually the biggest transaction people will ever have. And, I want to make one thing clear. I am a certified exit planning advisor, certified financial planning professional. I don't believe that everybody should exit their business or retire.
Right.
But I think everybody should plan for that eventuality. So in the context of what you're asking me, where the owner does want to go to market, they do want to monetize this business. It's the first time usually they've done it. They don't know what they don't know. And it's a huge transaction with a lot of consequences. It's kind of like heart surgery. You don't want to get it wrong the first time because the consequences are huge. And so the business owner doesn't really know what to expect oftentimes. So I think it's very important that somebody steps up and gives them clarity around what this is going to look like, who all the players are, and how they can be involved together. And, I will ask these owners, I'll say, well, how often does your CPA and your financial advisor and your attorney and whoever else is important to you professionally, your insurance agent, how often do they get together in a room, either with you or with independent of you, and just talk about what's going on in your life, what's going on in your business, and what are some areas that you may want to address? And then somebody brings that back to you. And I have yet to have anybody say, oh yeah, that's happened.
Right.
So nobody is really stepping up and taking the lead. So you asked the question, what does that look like for us? Well, I like to get those professionals together and just do a SWOT analysis. What are the strengths, weaknesses, opportunities in each of our disciplines? And then bring that back to the client and say, Mr. Miss Client, here are the 3 things we identify that you may want to look at. Are these important to you? And if so, who would you like to lead the team? Who do you want to quarterback, to use your analogy? And
Right.
what I find is that not only simplifies it for the owners, it can save them a lot of time, which is important, and it can save them money.
Yeah, I think at the end of the day, right, you want to maximize value and you want them to, at the end of the day, you are going to save money in the long term. You're making an investment, right? And owners, everybody has their own fee schedule and things people charge. Some people don't charge at this time. It's people are looking at it from a standpoint of we're creating value, and becoming and trust, right? Because you can have a team, but it has to be, the owner needs to trust everybody's going to be communicative, open, transparent, and honest, good or bad. Right? The last thing you want is a yes person. You want someone to say, this doesn't work. This is not, I'm dealing with that right now with the clients. And if you wanted that to happen, then we go back to the buyer, but it's going to extend this deal out another 60, 90 days because they got to go back to their bank. They got to go back to the lawyers. They got to go back, it's not just their decision. There's consequences and other people who are providing services to this buyer that have to be brought into it. And he has an urgency for various reasons, like, oh, no, it's 3 more months. I'm like, well, that's, you got to weigh the cost benefit, right? So, and you got to have a strong team, wealth management, CPA. A lot of these clients we deal with have what I would call the CPA just prepares their tax returns, right? They don't have a CPA that knows how to really put together a good set of financial statements that's really important to the buyer. So maybe you got to transition, or maybe you got to up your game, right? If you go from internal financials to a compilation, which is the middle, to a review, to an audit, somewhere along those lines, there has to be a change to give you, from that perspective. The lawyer, I mean, obviously a estate and trust lawyer. A lot of our clients have their real estate or quote unquote family lawyers. Terrific people, but they're not proficient, or this is not their expertise, right? They don't deal with this daily. You need to have someone who's everything's expertise now, right? Someone who focuses 100% of the time on transactions, on corporate and M&A, right? Your wealth, and then your estate and trust lawyer, and then of course your wealth manager, and then picking the right banker, right? And then the value add from that, all these together, to support the family and the owner, as you were saying, is going to hopefully give them the outcome that they're looking for long term, whether it's now, 10 years from now, or 20 years from now. So, I mean, that's kind of how I think we're simpatico and of like minds, is that bringing these parties together is it's sometimes we haven't met, right? You and I, or me and this accounting firm or this lawyer, we may not have met. So getting a dialogue going, getting a trust between the advisors is also important.
Yeah, Keith, you're right. It's paramount. It's like, to use I don't want to mix analogies, use a quarterback analogy, but if I needed heart surgery, I don't want to go to my general practitioner and, have him or her do the heart surgery. I want a specialist, and I want my doctor to be able to say, that's not my area of expertise. And I have seen, like you, the wrong professional, potentially blow up a deal. It's like you need a transaction attorney, not your estate planning attorney, to come in here and look at, these documents. And if they haven't done that before, you want that attorney to at least say, hey, I'm not the one for this, right? Or the CPA or whoever it is that you need to bring to the table. So I think it's important that the quarterback can vet some of these people as well, whether that's you or me, when we're bringing this kind of informal team together, this collaborative team, that we need to be able to have a way to vet these people and say, hey, have you done this before? Is this an area that you're comfortable with and you have competence in? And that's every professional that comes to the table.
Yeah, it's interesting because we have this team, right? And because let's just say we're doing a transaction, we're involved, and then but from my perspective, it's like once the deal's closed, it's like we're not involved anymore. It's done, right? We've done our work, and I like to stay in contact with our clients, usually on the anniversary of the closing, or maybe a lunch date or dinner date or something. But people get onto different things. It's hard. So what I love to do is, because you're involved heavily after the transaction, what I love to do is have you come back. And maybe give a couple of cases, examples of, ongoing work you're doing and deals after, kind of like, life after the transaction, how it all worked out for your clients, and how they would benefit the fruits of the business over 20, 30 years. And you kind of share that with our audience. If that works for you, we'd love to have you come back for that.
Be happy to.
Great. Well, Richard, thank you for being with us. We'll definitely have you back next time to talk a little bit about some real life experiences. Thanks for being with us today. My name is Keith Dee, President of Osage Advisors. If you enjoyed today's podcast, please feel free to subscribe to our YouTube channel. To learn more about Osage, you can visit our website at osageadvisors.com. Feel free to email me at kdee@osageadvisors.com with any questions, or feel free to pick up the phone and give me a call at 860-767-3273, extension 1001. Thanks again for being with us, and have a great day.